Central banks around the world have started signaling that the days of basically free money are over. England has raised interest rates, so has New Zealand. Australia is still sitting on its hands, but really all eyes now are on the Fed, where they have said that interest rates are likely going to rise and quantitative easing is going to be unwound in 2022. But what does that mean for the sizable numbers of listed companies that are said to be zombie companies? Well, in this video, we're going to take a look at zombie companies, but also whether I think that we are heading for a zombie company apocalypse. Right, so what is a zombie company? Yeah, I know it does sound a bit silly, but some kind of attack of the killer zombie company could have major implications for the global financial system. A zombie company is a company that does have enough cash, it is bringing in enough revenue to cover its day-to-day running costs, but it isn't bringing in enough to repay its debts. So if interest rates were to rise, they would likely go bankrupt because they just don't have enough money coming in to cover those higher interest costs. These are companies that are being kept alive by historically low interest rates or other government support. They often need to keep borrowing more money at super low interest rates in order to keep running. They're basically being kept alive on life support by the central banks. You could say they are the walking dead. Now, the term zombie company, that was coined in the 90s when the Japanese had a massive economic bust and they went into what was called the lost decade. Like today, how all the talk is about China surpassing the US to become the dominant financial player in the world economy, well, back in the 80s and 90s, it was all about Japan that was on the rise and set to dethrone the US. Except the thing is, it never happened. They went bust instead. There was a massive real estate crash and the economy went into a prolonged period of low and no economic growth. It really went on for not one decade, but really 3 decades. So how did we get to where we are today? The scary thing is that some estimates have it that zombie companies make up as many as 20% of all listed companies. So that's 1 in 5 companies that really shouldn't be there. It hasn't happened overnight. The problem was already there, mostly due to loose monetary policy. You see, money has been cheap since the GFC in 2008. And then 2020 happened, so government printing presses went into overdrive and interest rates went to the floor. And all that cheap money has been sloshing around and around, and it has to go somewhere. Where you've now got a situation where you have a lot of businesses that probably wouldn't be financially viable if interest rates were more at normal levels. Well, they've been having cash rain down on them like some kind of gift from above, and they've been lapping it up like there's no tomorrow. And of course, everyone loves it at the time because on paper, we're all making money. But the thing is, it's not sustainable in the long term. One day it has to come back to bite, and when it does, it probably will hurt. It's a bit of a ticking time bomb. You see, companies, or zombie companies, when they take out debt, that will be for a term of a certain number of years, and they would have taken out that debt at a low interest rate. Now, when that term expires after that said number of years, well, they're going to have to refinance that debt, but it's probably going to be at a higher interest rate. So that means their interest expense is going to go up, and when they were just scraping by the skin of their teeth before, now they're going to be underwater. And when that seemingly endless stream of cheap money does dry up, well, that's when the bankruptcies will come. For you and me, that means your super fund or your 401k is going to take a hit, along with your share portfolio. And if the GFC is anything to go by, banks will stop lending, businesses will be afraid to invest, and that means unemployment will go up. It could get a bit ugly for a while. Property prices will probably also take a dive. This is because one of the main factors that drives property prices is the amount of available credit that is on offer to the public. So if less people can take out loans because the interest rate is higher, which means your repayments are higher, so less people can afford to take on a loan, that means less people are buying. It also means that people who are on the margins before, the people that did have a loan but could only just afford it, and now the interest rates have gone up, they no longer can afford it, so they're going to have to sell. So if less people are buying and more people are selling, that means that's going to put downward pressure on property prices. All right, guys, quick break in the video here. Now, if you want to earn a little bit of extra money on your crypto, head down to the link in the description there. There's a link there to BlockFi. You can earn up to 9.5% currently on your crypto deposits, depending on what coin you're investing with them, you have to be comfortable with the risks of crypto. Crypto can be volatile. It's not protected by government protections that you get on term deposits and that sort of thing. So it is a high risk investment, but there is an opportunity there to earn pretty high interest rates if you are willing to shoulder the risk. So if you're interested in BlockFi, head down to the description there. You can get $250 up to, depending on how much you invest, of free money when you register for the platform by using that link. All right, back to the video. All right, so how can you prepare for a zombie company apocalypse? Well, let me just say here that nothing is for certain. I don't have a crystal ball. People have been saying that this kind of thing is going to happen for years, but it just hasn't quite come to pass just because there's so much central bank intervention these days. But the good scenario would be that things unwind in a slow manner, that we have a soft landing, that we unwind these excesses in a non-detrimental way, and that basically everyone gets to keep their shirt, and we have a bit of a period of lower growth, but it doesn't wipe us out. That would be the good scenario. But you also can't expect that after a decade-long debt binge that there will be no hangover. When it comes to debt and buying things, you pay now with your cash, you pay later with a debt, and pay your interest and paying back your debt, but you always pay. One way or another, you always pay. And if it does get ugly, a lot of people will suffer. That is the reality of a deep recession, but it doesn't have to be the end of the world. You can position yourself to come out of it in an even stronger position. With every crisis comes opportunity, and there are many examples of people who made bold decisions at times when everyone else was running scared, and as a result of that, made a fortune out of it. There's no better time to buy than when there is blood on the streets. And if you have the resources to capitalize on that, you can be handsomely rewarded for it. In practical terms, this means not carrying too much debt and making sure that you have the ability to continue your repayments on your debts if interest rates do go up by quite a lot. Build up a bit of a war chest so you can have cash reserves or access to capital so that if there is a property crash or a stock market crash, you can jump in and pick up these assets on the cheap. And have more than one stream of income so that if you lose your job or your business drops off, that you still have some money from another source coming in. That's going to help you out a lot. In a zombie company apocalypse, there will be massive buying opportunities. Things will be so cheap that you have never seen it like this, maybe in your lifetime, depending on how old you are, of course. But that said, it may never come to pass. So what should you do? Well, I can't tell you what to do. That's something you have to decide for yourself. But for me, I'll be continuing to buy a combination of growth assets and defensive assets to balance that out. I'll also be keeping a little bit of powder dry so that I can pounce on a cheap property or some cheap stocks if the opportunity should arise. Okay guys, that's it for the video. Let me know in the comments section what you think. Will there be a zombie company apocalypse? Is this all just crazy talk? If you think there will be a bit of an apocalypse, or not an apocalypse, but some kind of extended downturn, what are you doing to prepare for it? I'd love to hear what you guys are thinking about this. Anyway, thanks a lot for watching, and I hope to see you in the next one.